Taking a live look right now at the markets, which opened about an hour ago. Looks like the Dow Jones right now down kind of around that 800-point mark right now, fluctuating up and down, of course, as we go throughout the morning. This is a big swing downward from what we saw just within the last half hour. The Dow was actually up at that time. Just goes to show you that whipsaw effect that we are seeing with the markets lately. President Trump has paused reciprocal tariffs that just went into effect last night on most countries for 90 days. Across the board, 10% tariffs remain in place.
Associate Professor of Finance at CU Boulder, Shaun Davies, joins us this morning to kind of break it all down because it is pretty wild. Shaun, thank you for being with us this morning.
Absolutely.
It's hard to keep up.
Well, like we said, anybody who can help make sense of this, we appreciate them coming in.
Absolutely. It's hard to make sense of a lot of things right now. We are in some unprecedented times, a lot of market volatility. I'm sure if you've looked at your 401k recently, you've had to get the Tums or the Rolaids out.
Sure.
Yeah. We want to start with a big picture question. How would you describe the current state of the markets right now as we speak?
It's volatile. Right now, the attention has really been on the stock market for the past several days, but where folks probably should be looking right now is the bond market. We've seen the U.S. 10-year Treasury incredibly volatile over the last 36, 48 hours. That's important for households because almost every form of debt, whether it's a mortgage, car loan, everything is tethered to that 10-year rate and it is whipsawing around.
I want to steal your word that you kind of use because you're right, we have seen a lot of volatility. What are some of the key factors that are driving these big swings that we're seeing?
So we all knew the tariff announcements were coming out on Wednesday. When they came out, they were much more strong than we expected, and we saw the market go into sell mode both Thursday, and then when the reciprocal tariffs came out, more selling on Friday. Going to the weekend, not sure what's going to happen. Coming to Monday, not that bad of a day, but we continue to get news headlines. We had some tweets that went out that weren't actually factual, that caused massive volatility in the markets. And then now we're starting to see some cracks in the credit system, things that if you're in the bond market, you're paying attention to, that suggests that maybe the plumbing of our financial system could be weakening.
Okay, so the administration, of course, just announced a pause on certain measures here. What's the immediate market reaction and the likely long-term impact?
So the immediate market reaction, as we all saw yesterday, was about a 10% increase across the broad market indices. People were very excited about the news. But if we take a step back, imagine you're the CFO of a Fortune 500 company.
Exactly.
What are you going to do right now? You're going to sit on your hands because maybe for the last 5 days you were thinking about onshoring production. Suddenly, the rules have changed in the last 14, 24 hours. Now you're going to say, why would I put shovels in the ground when I don't know if this is credible? So I think right now we're in a holding pattern which could have real implications for our real economy as CFOs and decision makers just wait. Just wait it out.
How much money is kind of being lost as you just sit there waiting it out, though?
I mean, as I tell my MBA and undergrad students, you always want to pursue positive net present value opportunities, and those generate real wealth for the economy. And if you're just sitting and waiting, we're missing those opportunities. We could see a slowdown. We could see companies pulling their guidance. We're going to see, the VIX, which is a fear indicator. It's a market volatility indicator. Usually it's between 50 and 20. Right now it's just under 50. So it's going to be a rough ride. Yesterday was nice. I think we all benefited from yesterday's run in the markets, but it's scary, and I don't see quick resolution to this.
I want to ask you real quick about a word that kind of scares a lot of people that we're talking about the potential of, and that's the recession. Is there a strong possibility of this happening? It kind of depends on who you're talking to, I guess.
It depends who you're talking to and what day of the week you're talking to.
Exactly, fair.
So, I think that recession, it is a scary word, especially in an environment where inflation is still relatively elevated, although we did get a good print this morning that it's moving in the right direction. But what you worry about is a recession combined with inflation, like we saw in the 1970s, and that can be very bad. Now, are we headed to a recession? Typically, we don't know till we're already in it. We may already be in one for all we know. But as the consumer pulls back, particularly in the United States, we're a service-based economy, that doesn't bode well for the economy and GDP growth.
All right. Well, Shaun, thank you so much. I
Thank
feel like
you.
we're probably going to have you back on as things continue to fluctuate.
Yes, yeah.
But glass half full, it is Masters Week. So we've got that going for us.
And glass half full, you got to meet Erica, who you said your wife is a fan of.
Big fan. She follows
And
her
your
on
daughters,
Instagram.
they're
Say hi
so
to your wife and
precious.
your daughters right
Hey,
now.
Christine. Hey, Charlotte. Hey, Victoria.
Trying to keep,
Hey,
you
Annabelle.
said you're going to try to keep it positive. That's
There we go.
There
we
we
end
go.
on a happy
There
note.
we go. End on a happy note.
right there.